Once a huge but unsung force in global economics, Blackstone has found itself thrust into the spotlight. For years, millions of individuals have been steadily priced out of their own houses, with the cause blamed on whichever political party one happens to be opposed to. But in the past 12 months, the underlying cause has emerged, and it goes by the name of trillion-dollar businesses like Blackstone. Sky-high ransom family will never be able to realize the American dream and own their own homes since there are actual, verifiable incidents of Blackstone and their subsidiaries and other institutions buying up entire subdivisions of properties with a single phone call. Welcome to Financial Fortune, the YouTube channel where we explore the world of finance, investing, and economic trends. In today's video, we will be discussing a concerning development in the real estate sector: the potential collapse of Blackstone due to a bank run, reminiscent of the 2008 financial crisis. And during this entire ordeal, Blackstone had seemingly been on the winning side, gobbling up more and more assets until they reached the status of a $1 trillion company. Recently, though, things have begun to go bad, and Blackstone is no longer in a disadvantaged position. With a prolonged bank run damaging their finances, they are on the verge of collapse as the housing market enters a slump the likes of which have never been seen before in history, not even during the global financial crisis and subprime loan crisis of 2008. It's hard to hear this news and feel bad for the unethical businesses involved, and we shouldn't. Yet we should be cautious since the following step will not end well for either of us. To understand how Blackstone came to control such a vast asset class, we must first understand how we got into this mess in the first place. It all started a few years ago when Blackstone's founder and current CEO, Stephen Schwarzman, decided the globe was not enough. He was also coveting your house. So he began seeking funding for what would become the world's largest real estate investment trust. He amassed hundreds of billions of dollars quickly and began purchasing properties in virtually every country on the planet. He not only splurged on real estate in the United States and Canada, but also in the United Kingdom, France, Germany, and Italy. Things kept going well for him, so he didn't stop there, he even expanded into Asia. Blackstone's acquisitions were appreciating at absurdly high rates, significantly outpacing even broad market indices. Blackstone claims that if there were two similar office buildings and they acquired one but not the other, then 2 years later, the one they bought would be worth 10 more, which is why they were able to expand so rapidly. The value of their possessions was determined by themselves. They went to a bank and asked for $10 billion more to acquire additional property. When asked how much their assets were worth, they gave the bank whichever figure resulted in the largest check being deposited into their account. This is how Blackstone came to rule the single-family home market in addition to the commercial and industrial real estate sectors. However, the housing market is not as robust as Blackstone would have you think, and things begin to unravel for the company at this point. Blackstone is in far worse shape than most people realize, and I would venture to say that theirs might be one of the worst catastrophes we witness in the future years. This empire that they've constructed is plain to see. It was founded on rising home values and low interest rates, but now both of those things are vanished. So, everything is coming to an end, and you might not even notice it now. However, the downturn in the property market has already begun. However, since this is a crisis in the real estate market, it will take some time before its effects are fully felt. But believe me, it will, because the data suggests this is going to be the biggest one in history. In almost every major city across the US, home prices have been dropping off in stupidly fast fashion over the last 6 months. And according to data from the Federal Reserve, the American government, which has every reason to try and manipulate this data to make it look better than it is, house prices are falling faster than you would believe the case. For the past 5 months, Blackstone's investors have been frantically trying to get their money out. I say trying, because they haven't been successful. The assets are physical properties, so liquidity isn't great. And Blackstone stipulates in their contracts with investors that they are not obligated to return capital to investors, if they so request. We have been witnessing what amounts to a bank run for months on end, but instead of dealing with it, they have locked their doors and buried their heads in the sand. And I'm not exaggerating when I say that, since it has been happening for 5 months straight, beginning in November of 2022. And despite this, and the sheer duration and size of this crisis, Blackstone is experiencing reporting from the mainstream media is virtually non-existent. A bank run has been bad enough for Blackstone, but now they're starting to default on their loans, revealing how vulnerable the whole corporation is. Defaulted on a $562 million bond secured by a vast network of European stores and Finnish offices, just like Stone did a few months before. They didn't want it to chill Blackstone's bluff and attempt to make them pay promptly as needed by law, so they asked for a debt extension when they recognized they couldn't truly pay out what they owe for bondholders. Blackstone, however, is denying that there is a problem by claiming that the debt only applies to a small portion of their portfolio and expressing regret that the servicer did not advance their proposal, which reflected their best efforts. In essence, they are attempting to gaslight the public into believing that there are no issues, but the reality is beginning to leak out. A month after the news broke, Blackstone stopped making payments on the loan. A further 2 defaults followed shortly thereafter. The New York City one is valued at $217 million, while the Las Vegas one is estimated to be worth $325 million. This mortgage issue Blackstone is going through right now is already costing more than $1 billion, and it's only getting started. Oh, and by the way, you won't see anything about these 2 defaults on mainstream media, since not a single legacy outlet, including Bloomberg, CNBC, Fox News, CNN, and any other mainstream media outlet outside the US, has elected to even warn its users or readers as to what is going on. Probably due to the fact that they have been bought off and serve Blackstone's interests. I have one question for the people who say this isn't a huge concern because the loans aren't that substantial or that it's something Blackstone can easily handle. Why hasn't Blackstone just paid off these repayments if they aren't a big deal to them? They stopped making loan payments. The question is whether we should assume that someone who can't afford to pay off a $2,000 automobile loan is so wealthy that the payment doesn't matter to them, or whether they are in fact poorer than they let on and just don't have the money to make the payment. How long until Blackstone's other hundreds of loans go into default if they can't even repay the ones they currently have? When exactly will Blackstone's time run out? The stock price has dropped steadily over the past year, down a stunning 42% so far, and it shows no signs of stopping. The company is, unfortunately, on the way out. It's taken a serious hit, and the banking crisis is certainly not finished, with the recent failure of First Republic Bank marking the second greatest banking disaster in American history. Thank you for watching Financial Fortune, where we bring you insightful discussions on finance, investing, and economic trends. We hope you found this video on the potential collapse at Blackstone, reminiscent of the 2008 financial crisis, thought-provoking. If you enjoyed this content, please give us a thumbs up and subscribe to our channel for more engaging videos. Stay tuned for future updates and analyses on the ever-evolving landscape of finance and economic trends.